Hello everyone, my name is Rainer and welcome back. So in this week's market analysis, we'll look at the euro dollar. We'll ask whether, a question that I get from traders is whether euro dollar has bottomed out. So this is a pair that I will look at more in depth this week. Also, we'll cover a couple of trading setups which we mentioned a couple of weeks back, which is the copper trade and the soybeans trade. And last but not least, I will share with you another trade which is pound yen that I'm currently looking at. So first thing first, euro dollar. So we have traders asking me whether this pair has actually bottomed out. And the thing about predicting whether the market has bottomed is that no one can predict when the market will bottom out consistently or whether the top is here. No one can predict accurately on a consistent basis. But what we can do as a trader is to react to the price action that the chart is telling us. So looking at the euro dollar, this is the weekly chart. So what happened is that we have a series of lower highs and lower lows. So we have lower highs over here, lower highs, and this lower high over here. And what happened over the last 5 weeks was that the previous lower high over here was actually broken up by this strong bullish retracement towards the upside. So it took out this swing high over here, and that led to many traders to suspect that perhaps the euro dollar has actually bottomed out. And look what happened this week. This week we had this bearish engulfing candle over here, which took out the lows over the last couple of weeks. So just to highlight it clearer, you see price of this week's candle, it closed lower compared to the last 2 weeks candle over here and here. So this week could potentially be a game changer for the bulls, because over the last 1, 2, 3, 4, 5 weeks of bullish action, we had the bears coming back in control and closing lower over the last 2 weeks. So momentum seems to be picking up towards the downside once more, and a key level to take note of is actually this swing low over here. So that will be a level that I'll also be paying attention to see whether if it can hold. Because if it does not hold, then chances are the trend is going to resume and the downside would persist along in the coming weeks. So a key level to take note of on euro dollar is actually this swing low over here. So looking at the daily chart, we see that price initially had this double bottom, right? Then it rallied higher, taking out this resistance over here. Right now, price seems to be trading lower into this previous resistance turn support. So whether can this level hold, we'll have to see in the coming weeks. Because if it does not hold, the next key area that price will probably trade into is this swing low over here. Sorry about this. So yep, this is something that I'll be looking at. And that's all I have for euro dollar. Up next, we'll look at copper trade. This is the chart of copper. So let's look at the weekly chart. So previously I mentioned, I think a couple of weeks back, I said that copper tends to respect the 50 EMA by quite a bit. So your respected ones over here did a false breakout towards the upside over here as well. And then what happened was a couple of weeks back, price was in this area, right? It consolidated for 2 weeks. Notice the two candles. The price consolidated over here, and it came into this previous support turn resistance. So to me, this area was a key level because the trend of copper is still towards the downside. And as it came towards the previous support now turn resistance, price was consolidating over there. So looking at the daily chart, we clearer. So it was this area where price was consolidating for 2 weeks. So at this point, what is interesting about this is that there are bulls and bears on both sides. Those who actually went long because they saw higher highs and higher lows over here, so they basically went long at this potential flag pattern, so their stops was just below this swing low over here. Then on the other hand, we have traders who are looking at the bigger scheme of things. They were looking at the weekly chart and noticed that the trend is still down, so they decided to go for a short and place their stops above this swing high over here. So the thing is that we do not know which side will win. It could be the bull or could be the bears, but chances are the odds would favor the bears because on the weekly time frame we saw that it is still in the downtrend, and price came to a key level, which was the previous support turn resistance, and it was also at the 50-week EMA where price was hovering at. So chances are it would have favored the bears, and in this case, the bears seems to have won the short-term battle, and price actually did trigger lower. So the next key level to look at is actually this swing low over here, this level over here, and last but not least, over here. So now most traders would probably be in the money if they had shorted, and they'll be very quick to take profits or actually set their trades to break even. But caution about going to set your trades to break even, because look at it. Say for example you shorted, say somewhere around the middle of this consolidation, and you set your trades to break even, so basically your stop loss is at this level over here. But you have to ask yourself, whether does it make sense to shift your stop loss to break even just yet? Because what price could potentially do is just come back higher, hit your stop loss, and then trade lower once again. So what happened is that you are cutting your trades into a pullback. Am I right? Because you set your trades to break even for the fear of giving back profits to the market. But what I would suggest is to let the market go further in your favor, to give you clues of where is the potential structure highs that you can take reference to. Only then do you set your trades to break even if it does make sense. So a scenario that I envision would be this. Instead of quickly setting your trades to break even, I would rather you set it at its original stop loss location. Say for example, your stop loss was here. This was the original stop loss. Leave it down there. And say in the coming week, price does trade lower, then it retraces higher, then it trade lower once more. So there is something now. The market has given you a clue. It has shown you that there is a lower high over here. And now, if you want to shift your stop loss lower, just above the lower high, then yes, it makes sense because you have this lower high that could potentially act as resistance in the market. So then it will make sense to shift your stops to break even or to trail it down lower just above the high. So do not be too quick to set your stops to break even because it is, I would say, it is usually a fear of giving back profits to the market. And if you look at it over a series of large number of trades, it's usually not too good for your trading because you tend to be stopped out only to watch price go further in your direction ahead. So this is something to share with you guys. And up next, let's look at soybean. Again, soybean was a trade that I think we have been looking pretty actively. So looking at the weekly chart, again, I think last week I mentioned that there was a series of lower highs here, coming into this support over here. And I said that chances are one of two things could happen. It's either going to be a legitimate breakout, or two, it will actually be a false breakout. So it will be let's call it a F false breakout. So again, what happened this week is, will it be a false breakout or breakout? It's still too early to tell. But one thing is for sure is that on the daily chart, you see we have pretty strong bearish momentum towards the downside. And again, once again, there's no need to set your stops to break even just yet. Because what could potentially happen is this. Say for example, you went short just below this swing low over here, right? You traded the breakout towards the downside. And you're already in the profits. But you are afraid of, giving back profits. So what you do is you go and set your stop loss back to your entry level. But you have to ask yourself, does it make sense just to set your stop loss so quickly? Because what could potentially happen is price traded higher, right? Then it tested the previous support turn resistance, which is this area over here, previous support turn resistance, and then it traded lower once more. So by setting your stop loss to break even right now, you are actually cutting yourself into a trade whereby price could potentially reverse in this zone, the previous support turn resistance. So again, do not be too in a hurry to shift your stops to break even. Let price decide where it wants to go, and then watch the price action of it and trail your stops accordingly. So I would say this is a mistake that most newer traders do, because they are losing consistently. So whatever profits they have in hand, they tend to take it quickly or set to break even to protect their open profits. But if you look at the grand scheme of things, the next 10,000 trades, you know that this course of action will be detrimental in the long run. So I would rather you trade smaller size, a size that you're comfortable with, and trail your stops according to what the market shows you instead of how you are feeling at a point in time. Because that is much more logical if you ask me. So last but not least, let's look at the chart of pound yen. So this is the chart of pound yen, and I think last week I mentioned that I was bullish on it, but the key thing to note is that price has actually come into this key resistance over here, right? So this is a multi-year highs. Price has actually traded it, triggering the cluster of stops just above this high, and now it seems to be retracing. So in this case, what you have right now is traders who got short. They could potentially got short because of this bearish engulfing pattern over here. Then their stop loss is over here. And traders who went long also took profits just ahead of this resistance level. So the thing is, the bullish momentum is still towards the upside. There's no doubt about it. But could this level hold and push price lower? That is something that you have to watch. As a trader, you're always playing as the market unfold itself in real time. You can't make prediction ahead of the next 3 or 6 months, but rather you're trading now. Price which is currently traded at now. You're trading the now moment. What is price doing? So I'm watching the pound yen. I'm still having a bullish bias towards the upside, but I don't deny that this resistance over here could potentially act as a level where price will reverse from. So I'm watching to see if the resistance level hold, because if it doesn't, and what price does is it starts going down lower, then it traded higher, it traded back lower, traded higher, and it starts to consolidate at this key resistance over here, that is telling me that the bears are trapped. Those who went short are trapped because the price is not going down any lower as what they had anticipated, and the cluster of stops will just build up more and more over this swing high over here. And this is where I will look to trade a breakout towards the upside. But then again, I'll watch how price unfold, but this is a particular trading setup that I'll be watching in the coming weeks. So I hope you guys find this week's video useful, because if you do, you can feel free to leave the comment section below. With that, I wish you guys and girls good luck and good trading. I'll talk to you soon.